Well, folks, it's official. The market is out of control. Kind of like my hair is usually out of control. What's going on there? That's about normal. Alrighty, guys. So the market's completely out of control. We got a lot to get into in this video. I want to show you guys a lot of what's going on, essentially. Not sure if you saw Snapchat here today. It's up around 60%. 60%. This is an $80 billion market cap. Unbelievable. Unbelievable, okay? Now, this is extraordinary, okay? First off, I took this screenshot about an hour and a half before the market's closing. Look at this. Volumes, 231 million shares have traded hands. Oh my gosh. By maybe the end of the market close, every single share might have already traded hands on Snapchat. That's incredible. Average volume is 22 million. So essentially, this is, this is going to be a, probably somewhere around, I'm thinking by the time the market closes, it will be about a 1,500, maybe 1,700% increase in volume versus average volume. That's extraordinary. And this sort of move, guys, is so far out of control, I don't even know how to explain it, okay? I mean, there was nothing even that crazy about the earnings. Like, they were good. I looked over the numbers, but it wasn't like, oh my gosh, the stock needs to go up 60% tomorrow, right? But this is the most amazing thing about the Snapchat move, okay? Stock's up 60% here today, and it's still down well over 50% from 52-week high. I mean, usually if you ever heard of a stock going up 60%, first off, you'd think that must be some penny stock or something like that, not a $80 billion market cap. No, it's an $80 billion market cap. Second thing you'd be thinking is, okay, that stock must be at some new all-time high, 52-week high. No, it's still down 50% plus, right, from $83. I mean, that's nothing short of extraordinary in terms of Snapchat shares, and that's just the tip of the iceberg on how out of control this market is, okay? This next part, right? Amazon. When I did my video yesterday, I had just looked over the preliminary numbers for Amazon, okay? I looked at them more in depth. And what I found that was the most disappointing quarter I've ever seen Amazon report in terms of their guidance, in terms of their past revenue number, in terms of things that helped out their EPS number in this past quarter, but those things won't help out EPS in the upcoming quarter, and actually will probably hurt the EPS number. Like, literally, like, everything I looked at, I was like, this is the most disappointing Amazon quarter I've ever seen from tracking that stock. Usually Amazon reports great earnings, like they destroy revenue estimates, they destroy guidance, they have incredible numbers across the board, and this earnings report was nothing short of a massive disappointment. And I mean a massive disappointment. And yet, look at the stock price. You would think this was the greatest quarter Amazon ever reported, right? A 16% move. For Amazon stock, we're over 3x, or right around 3x the normal trading volume. And once again, I'm taking all these screenshots about an hour and a half before the market closes. Now, something to keep in mind here with Amazon, very important, is how out of control the market is. If we go back to July, August of 2020, this stock was $3,400 a share, right? So even here today, after this big upward move, the stock is still down, a couple $100 from where it was at, 19 months ago or whatever? That's a long dang time ago, right? And think about, we can say Amazon's made tremendous progress over the course of that time, right? They've reported some unbelievable earnings periods in that time period. They've made progress in that time period. They've built out way more warehouses in that time. Amazon Web Services has expanded exponentially since then. Their balance sheet's in a better place. Their income statement's in a better place, right? Everything's in a better place for Amazon, but the big but is, the shares are still down from there, and that's where you get in this insanity in the market where you're like, man, that was the most disappointing quarter Amazon ever reported. But it's not like the stock was trading insanely rich going into it, or this was a high flyer or something like that. The stock's down from where it was, over a year and a half ago. So now, keep in mind, 1 year target on Amazon. This is another thing that will fry your brain. 1 year price target from analysts is $4,100, which is $900 from here, right? And so, if analysts are right, which they're usually wrong, the stock will rise another $900 over the next year, essentially. And so, the one good thing for Amazon is it was such a disappointing quarter that I can't imagine them necessarily disappointing that bad in the next quarter. Okay, that was hopefully the worst of it when it comes to that. And then you look at Meta, who had disappointing earnings, just like Amazon did. And what does that stock get? It gets a 26% decline. The stock market is never fair. Let's put it that way. Based upon what happened in Amazon stock, what happened with Amazon earnings, and what happened with Facebook earnings, we'll call it Meta earnings, right? Both those stocks should have been down huge. I think 26% was probably an overshoot to the downside, and Amazon going up 16% is probably an overshoot to the upside based upon those earnings. If this was a fair stock market, right, both those stocks would have been down 10 to 15%. But that's not the way the stock market is. The stock market is very unjust in the short term, and sometimes trying to make sense of the short-term moves in the market is just it's a tough proposition. Now, this is the scariest thing I've ever heard any CEO ever say. Carol, she is the CEO of UPS, okay? And I was on that conference call, and I heard one of the most concerning things I've ever heard from any CEO ever, okay? She said, this is from the transcript of it, and in terms of our current trends, because the analyst was asking questions about current trends, she says, the first week of January, I'm like, where are the customers? That was beyond scary. Like, if the CEO of UPS is saying, where are all the customers? Like, something went wrong there, right? Like that's just darn scary, like startling scary. Like, where did all the customers go? Yeah, that's freaky, okay? But then she says everybody seemed to have been home because of Omicron, but the business has come back roaring, she said, right? So we're feeling really good about the guidance they just gave. So it's like, on one hand, we get this ultra scary, like the scariest thing I've ever heard, where all the customers go when you're the CEO of UPS. But then she says business come back roaring. So we're in this, state in the stock market of max confusion. And it's not just around the Fed. It's about the underlying economy, because you hear something like this and you're like, okay, but are we going to go back to what happened the first week of January and the customers are going to leave again? Or is business going to continue to roar for this company? And, in my opinion, the most important company you can pretty much look at in the whole world in terms of, distribution of goods everywhere, right? There's nothing more important to look at, in my opinion, than UPS. And so if they have something concerning to say, it's scary. But then they said business come back roaring. This is just another reason why the stock market is so out of control right now and moving around like, insanity because of stuff like this, right? And people just like, what is really going on? Speaking about good old Rona, just as I thought, numbers are skyrocketing down. And, it's what I figured would happen. If you look at the trend last year, things peaked down in January and then they started to skyrocket down. That's exactly what we saw. Things peaked in January and things are starting to skyrocket down. I think mask mandates and all those sorts of things will go away in the springtime across the entire United States of America. They've already started going away in some, European markets. And so this is something I look at as, bullish for the overall economy. That's something very bullish on the overall economy, because we can't deny that this has probably held back the economy. In late December and into January, because numbers went so high, I can almost guarantee you we've had our economic numbers hurt because of this. And meantime, the administration in office, they haven't done anything to really help out this situation. The Fed hasn't done anything to help out this situation. I think part of the reason is because inflation's been so high, I think they're afraid to do any sort of stimulus or anything like that because they're like, well, we need things to calm down. So if the economy's hurt for a month or two because numbers went so insane, they're kind of like in a place where like, who cares? Let it come down a bit. Maybe that will tame inflation a bit. And it probably will tame inflation a bit. Also, the numbers are going to be, the start to comp really tough in the back half of this year, essentially, okay? So that's good news overall for the economy and as things get more and more open, okay? Now, we're getting into small cap season now is going to start, which means small cap stocks. And if you own any small cap stocks, they're likely reporting over the next 3 to 4 weeks. And a lot of them, actually over the next 2 weeks, okay? Now, when it comes to small cap season, everybody's looking at these stocks and they're like, we just saw some of the most volatility we just saw the most volatile big cap earnings season I've ever seen, right? Some of these stocks that are tens of billions of dollars market cap, hundreds of billions of dollars market cap, moving 20, 30, 40, 50, 60% on earnings, that's beyond insane. So going into small cap season, a lot of us are just like, what is about to happen here, okay? Like some of these stocks, I wouldn't be surprised, if some of my stocks move 20, 30, 40, 50% on their earnings, up or down, to be quite frank. I'm going to guess probably more up than down, but because a lot of those stocks are already devastated. So even if they were to report any bad news, they're probably still moving up. But at the end of the day, when I look at the small cap season, I still got to keep some capital around for small cap season because I don't know what's going to happen here. And I got to be ready just in case anything falls 20%, because you never know how these things can kind of work out, right? And like I said, I think there's, a much higher probability that a lot of these stocks go up 10, 15, 20, 30, 40% than go down, but I have to be ready just in case, right? I think about Smile Direct Club. That's going to be a big one. That's going to be a mover, right? And not a huge position for me, but it is a position nonetheless. It's I don't know how much I have in Smile Direct Club. I might own 60,000 shares or so. Honest, this is one's built into a big position for me now. I have, multi hundreds of thousands of dollars in Honest now. I got to be ready for that one to move huge. And that's a silly one to move huge. Come on. It's a diaper and wipe company. It also sells beauty products and soaps and shampoos. Like, are you kidding me? You got to be flipping my flapjacks. Like, that run's really going to move huge? It's likely going to move huge because that's the market we're in right now, and you got to expect everything to just, make some epic moves. I think there's much higher probability to the upside than the downside, but I got to be ready for the downside just in case, right? Tattooed Chef's going to be reporting. That baby's going to be volatile more than likely, right? Well, here's the thing. If this market really just wants to ruin us, it'll make all the small caps not even move, right? They will just be like, what? So Snapchat at $80 billion market cap's moving 60%. Facebook at $900 billion market cap's moving, 26%. Netflix just moved 20-something%. PayPal moves 20-something%, and the small caps moved 2%. That'll just be the last, situation there. But the Chef, I have to be ready for that one to move, 20, 30, 40%. Oatly, same exact situation. That stock's been ultra volatile. And many of these stocks, you got to keep in mind, they have been devastated. They have hit new 52-week low after new 52-week low after new all-time low after new all-time low. And many of them are in a position where if they just get anything good, they're ready to fly to the moon. The Planet, I got to be ready for that one. That's another one's been devastated. That one has a 52-week high of, $7, $8, and it's trading in the twos. And the thing I just showed you with all those companies, all of them have amazing business models. The Tattoo Chef's growing like bananas right now. Oatly's growing so ridiculous it's hard to even explain. The Planet's a growth beast, right? Honest is a great growth company. Everything I just showed you is basically growth companies, right? A Smile Direct Club, that one's kind of on the fence. But everything else is a huge growth company in executing their business models as well as possible, and yet they're all at 52-week lows or all-time lows. And that's just kind of the market we're in right now. A lot of those companies also are companies that went public in the past 1 to 2 years. So they haven't been able to build up their long-term shareholder bases, and essentially they've gotten thrown into the worst small cap market I've ever seen in my time of being in the stock market, right? Just absolutely devastating. Now, the old Jeremy, the Jeremy of, a new investor of the market, 2008, 2009, the old Jeremy, I would have been flooding towards safety, or what I, would have seen as safety. So stocks like Walmart and Conagra Foods and those sorts of stocks. But I can tell you the Jeremy of nowadays, looks at a market like this and I say, where are the true opportunities in this sort of market, right? I don't want to flood to what is seen as the safety stocks, and we'll address safety stocks in just a moment. I don't want to fly to those sorts of stocks in this sort of market because that's not where the real opportunity is, okay? I think those stocks were the play if we go back a year ago and look at the stocks I was buying a year ago, December of 2020, January of 2021, loading up on Walgreens shares back then, right? When it was 30-something a share, loading up on JP Morgan and some of those stocks that are really, really boring stocks, but that's where the opportunity was in the market. It wasn't in small caps at that time because small caps are trading in, at ridiculous valuations. Everything was trading at ridiculous valuations if we go back to that time. And now we're just in a completely opposite market. And the Jeremy of nowadays looks at this and says, this is unsustainable. Mid-caps trading in here, this is unsustainable. They have to get back in more in a range in here. And so, this whole thing, and by the way, we're actually probably even lower than where Yardini has us at here today. Small caps trading down here, come on, man. That's... You can only stay unsustainable for so long. Eventually, we have to get back more in these ranges because that's where the market actually trades at, okay? You got to get more into the 16 to 21 range for small caps. That's natural. A 13 is not sustainable. So basically what has to happen is, it's just a matter of time. It's like a ticking time bomb before money comes into the small caps and mids and those babies go on an epic run. Now, we can all make predictions if it's going to happen this quarter or next quarter, but at the end of the day, it's going to happen. Just like this whole time period was completely unsustainable, right? And you looked at those valuations, you're like, okay, that's ridiculous. Like, we need to come back into these ranges. Yeah, the same thing now is on this side, and we need to come up into these ranges essentially, because the market can only trade unsustainably high or unsustainably low for so long. And then something's got to switch, something's got to change. And so that's where I've been putting so much money. I'm not even naturally a small cap investor. I'm just looking at this from a logical perspective, and I'm like, okay, if this is where the market's taking me, this is where I'm going to go. If we're going to trade at unsustainably low levels, I'm going to go there. 2011 is the last real time we traded this low on small caps for S&P 600 small caps. That shows me that we are in a ridiculously undervalued situation in this market. And outside of a major colossal recession, we're ready to go on a 1 to 2 epic year run. It won't be a 1 to 2 month epic run. It'll be a 1 to 2 year epic run, right? Just kind of like we had coming out of 2011. And we went on quite a run in small caps. And I see the exact same thing kind of playing out here. The only thing that could mess this thing up is if we had a massive recession. If we have a massive recession, that'll mess up the whole market. Outside of that scenario, small caps and mids are ready to go on an epic 1 to 2 year run. And, obviously I'm positioned exactly to take advantage of this. And I have money on the sideline to, a little bit left, just in case we have any sort of, other big downward moves here for smalls and mids. All right. Now, some of these, I was looking at some questions on Reddit. This person asked, have market reactions to earnings always been this extreme? No, earnings are usually pretty crazy. This one takes a cake. I've never seen this, companies like this moving this insane. Okay, so I just want to answer that first off. No, it's pretty unnatural to have this crazy of moves in some of the biggest companies in the world. A little crazy. Okay, somebody posted this: is this market volatility driving you further away from participating? I would say a lot of people in the market have already been driven away from the stock market, and that's unfortunate because these are every time the market gets crazy volatile, especially if stocks are getting devastated, that's exactly the time you've got to take stock market investing serious and you've got to get in the market. But in these sorts of time periods, people flood out, man. They're like, I don't want any piece of that market. And they just realize they're putting themselves in such a bad position because this is the exact time where so much money can be made. And it's unfortunate, but it happens every single time. And then when the market's super hot, that's when people like to flood into the market. And it's like, every single time people get in at the worst time and they get out at the worst time. And it's unfortunate, but it's human psychology. And there's no such thing as safe stocks, okay? We saw that with Facebook. Facebook is considered likely one of the top 10 safest stocks on the market. Well, look what just happened to it, right? It got cut 26% on earnings. There's no such thing as safe stocks. Right now, a lot of people are looking at oil and gas stocks. It's like, these are safe stocks. Man, oil and gas stocks are safe until all of a sudden oil price drops off a cliff. And that does happen. And that will happen, okay? Oil doesn't stay high forever, and next thing you know, some stuff happens. All of a sudden, all the U.S. producers start fracking left and right, and next thing you know, all of a sudden, Saudi Arabia doesn't want to lose market share, so they start, way overproducing. And next thing you know, oil price goes down massively, and so oil and gas stocks are seen as a safety play right now. And I can tell you, those aren't safe stocks long term. Things will flip, and the next thing you know, all of a sudden, those stocks will be devastated. And I've seen it before. I've been in the market when, the last time I really saw oil and gas stocks as seen as great safety stocks was probably about 2014, 2015. And after that time, look what happened to almost all the oil and gas stocks. A lot of them went out of business, or they had to be consolidated because a lot of their stock prices went down 40, 50, 60, 70, 80% during that time period. A lot of them got very over leveraged. So remember, there's no such thing as necessarily a safe stock in the market. They all come with risk. You have to be willing to accept that risk, obviously, if you want to get the reward on the other side. So I just wanted to kind of put that out there. Great time to take stock market investing super serious. You can scan this right here, this QR code, or check out pinned comment down there. We got a massive Valentine's Day sale coming up for the Private Stock Group Financial Forces program, which will teach you everything you need to know about successfully stock market investing. Much love as always, and have a great day.